Hey, what's going on, everybody? I hope everybody had a wonderful Thanksgiving. I just want to make a quick video. I've been spending the majority of my time working through some of this ISDA stuff, and if you haven't really watched the video that I did with Bigums, I suggest you take a look at that. It's called the Backroom, the high stakes casino, or the Backroom Casino. It's ISDA is basically where the big boys play, and where a lot of the stuff that I think is that's being used against our beloved stocks. I think this is the vessel and how they get it done. And so what this white paper is discussing, and this white paper was released in March of 2021, is using Chinese government bonds as margin for derivative transactions. So when you are participating in something like ISDA and you're doing big OTC trades, you are going to be susceptible to margin requirements, right? And sometimes really large ones. And so if you're over leveraged in all these positions and it's like it's like this back and forth power struggle, people like me begin to wonder, well, like, how are they meeting these margin requirements? How are they posting the collateral to kind of meet those needs? Well, this is a big thing. So these guys are saying that, hey, we're proposing that and are making a case to use Chinese government bonds as the margin for this, right? So, and this is a relatively long document, but just to go over a few certain parts of it and give you guys a basic level of understanding, right? So we're looking at Chinese government bonds, right? Are going to be using, as they're looking at this as a promising option to meet capital requirements. So in light of the global implementation of margin requirements for non-cleared over-the-counter derivative transactions, the China Central Depository and Clearing Corporation, and in conjunction with the International Swaps and Derivatives Association, ISDA, jointly present this white paper with a view to exploring the opportunities and challenges from arising from the use of RMB denominated Chinese government bonds as collateral in the OTC derivatives market. So what they are saying is that they're willing to, or they're exploring the idea of using these Chinese government bonds as collateral, which is really unique when we see things like what's going on with Evergrande or Evergrande, however the hell you want to say it, right? It's kind of a scary thing. So these Chinese government bonds are going to basically be the way that they're going to kick the can down the road to avoid potential margin calls. This is going to allow them to keep this kind of like that ship sailing. And so when you look at there's a lot of data in here, and we're not going to go over all of this, but we can go over some. And basically, this is why they're saying this is a good thing. So given the growth of China's economy, the internalization of the RMB, and the further opening of Chinese domestic financial market to overseas investors, some international firms are exploring the potential of posting Chinese government bonds as collateral in order to satisfy the initial margin regulations. The following section briefly summarizes developments in China's economy and financial markets. So what all this data is going to say is like why they're saying they are going to accept it, why this is an acceptable form of collateral. So they're talking about China's growth. You can see year over year or year on end, it looks like it's booming, right? They're doing the economy in China is growing, and they say that they're opening it up to more international overseas investors is going to continue that growth. Again, though, I don't know what all this is propped up on, right? You have companies like Evergrande that are fear of defaulting and all these different things. So it seems like this would be a risky bet to be using China's government bonds as basically collateral to maintain huge positions in. Again, it's probably not just meme stocks either. It's probably in a lot of things, and they're meeting government or they're going to meet their margin requirements by using these things. So let's keep scrolling down, and we can take a look at, there's some interesting stuff here. So this is a survey that they did. Now, I'd be interested to know where the survey is coming from, but I imagine they went to people that are partners or colleagues that are currently using ISDA and the CCDC already. But it says, are you willing to accept onshore RMB bonds as collateral to cover your exposures in and out of China? 71% of the people that participated in the survey say yes, right? And so for which transactions do you accept onshore RMB bonds as collateral? So if people were making trades on securities lending, derivatives, repo, or other, they are saying, yes, we'd be willing to do that. what's funny is repo is dominating this position at 66.67%. So 66% of the people are saying that, hey, we will accept these Chinese market bonds if you're going to be participating in the repo market. The next largest one is, go figure, securities lending. So 41% of them saying, yeah, on the securities lending end, if you want to use Chinese government bonds as collateral, we're okay with that too. And so it says, in choosing collateral for cross-border trades, the main issues identified by respondents including connectivity between local and global custodians in order to provide a global solution for collateral management involving RMB Chinese government bonds. And it says 60.42% of the respondents and mutual recognition and cross-border use of collateral to maximize the value of RMB bond holdings. The ability to use the offshore bonds to collateralize onshore transactions and RMB bonds to collateralize offshore transactions. In addition, participants would like to see a robust collateral enforcement regime and system enabling efficient rehypothecation of collateral in China. And so it says, if we look on to figure 16, it says anticipated steps to promote cross-border use of collateral. And it's saying system connections between local and global custodians to provide globalized collateral management services. 60% say this is like what we need to do. You're going to need quick disposal of collateral in default and rehypothecation of collateral in China to enhance efficiency of collateral use. Mutual recognition and cross-border use of collateral, adding to the value of bond holdings, and then obviously system support. So they say like this is kind of like the roadmap. And if you look, the participation of overseas investors in China's bond market, go figure. Well, we've seen the last time it was this high was in 2019. I'd be interested to go back and figure out what could have caused that. But really over the past, I'd say, 3-4 years, we've seen a huge increase. And obviously, if you look at February 1st of 2021, it's just under its all-time high again. And it says in recent years, the number of foreign institutions participating in China's interbank bond market has increased, resulting in a rise in foreign holdings of Chinese government bonds. At the end of 2019, the number of overseas institutions accessing the CIBM via the CCDC exceeded 1,600 members. In addition, the total amount of foreign holdings of Chinese government bonds reached 2.2 trillion, representing a year-on-year increase of 26.46%. So they're loading up on these. And it makes sense. If they're going to be able to use these Chinese bonds to meet margin requirements, it makes total sense they would be loading up into these, right? And then if you look at holdings of Chinese government bonds by overseas investors, bonds held by overseas investors deposited with the CCDC, which is what we're looking at, the yellow, this orange color. If you look, 2021, again, we're reaching the highest it's been since 2017. Well, why is that happening? Right? And this graph pretty much confirms that as well. And it says, in addition to the initiatives to further open China's capital markets, reforms on bond issuance, trading, settlement, and investor protection have been implemented. I'd have to go through and look and see really what that means. Like, what are the actual settlement times for these? What do they have in place for investor protection? And it says, from a risk mitigation perspective, the CIBM officially established a collateral default mechanism in June of 2019 to standardize the procedures and rules governing the disposal and liquidation of collateral upon default. Which to me, like, okay, they're saying, hey, if you default, they have something in play where they're going to make sure that they don't get burned, right? But it seems if this is all opening up like a can of worms, you're going to have people flooding to these bonds. So to me, it seems like, a margin call or them defaulting is probably highly unlikely. So moving on, let's see if I can find, and it is a really long document. Like I said, I highly suggest you go through and read it for a better understanding of yourself, right? But we can take a look at this. In 2015, the CCDC launched a pilot program allowing the use of bonds as margin for Chinese government bond futures contracts. So again, what they're proposing, though, is not going to be used for just future contracts because that's how it is now. So you could use Chinese government bonds for futures contracts, but now you're going to be able to use these bonds for basically all OTC derivative trades if this goes through. This is the use of bonds as margin for futures contracts is now supported by an electronic system significantly improving operational efficiency. Since 2019, over 10 billion of bonds have been posted as margin for futures contracts, representing a year-on-year increase of over 40 times. All right, so these are going to they're going to gobble these up. These bonds are going to be used like crazy to meet margin requirements. If it's already happened in the futures market and you're seeing the increase of over 40x just from being able to use them in the futures market, when you have full access to this, what do you think that that's going to look like? And so I just thought that this is really interesting, guys, without going too long into the video. Again, I'll source this for you guys so you go through and look at it yourself, but I would be on the lookout for this. ISDA is really the vessel that all this happens under. So long story short, you're going to have these funds, institutional investors using Chinese government bonds to satisfy their margin requirements. Scary shit. Again, maybe I'm overthinking it and I'm going to dive more into this and I will keep you guys updated as I go. Hope everybody had a wonderful Thanksgiving. I love you a long time. Peace.